Hi there, my name is Graham. I'm with a good mate of mine.
Nice to be here, Carel.
Yeah. And what I do is I look at the future. It's what I do for a living, and I'm really interested in the future of investing. And Carl's the guy that I know who knows the most about investing. I said to Carl a while ago, let's meet up. I just want to pick your brain. And Carl and I never meet up without drinking wine. So Carl said, if you bring the wine, I'll bring the conversation. And then we thought, well, why don't we share it with you? So, Carl, I want to talk this time about different options of investing. We know that we need to diversify, but part of diversification is choosing different, I think the right phrase is asset classes or different vehicles for investing. And I know on the platform that you've been involved in developing, this is one of the things that you guys do at Easy Equities, is it's not just about taking money and putting it into a retirement annuity or structured product or investing in a stock exchange. There are lots of other options, right? What are some of your favorites?
Yeah, absolutely. So my favorite, if I sort of shoot from the hip, is that ETFs. So ETFs are just a combination really of shares, which in theory makes it less volatile, less risky.
So for the non-trading people, it's an exchange-traded fund,
That's
right?
correct. And it sort of tracks various indices.
So the idea is if you want to invest in a particular industry, for example, or a particular country, but you're not quite sure exactly which single company to choose, you then take an index, which is then somebody else invests in a lot of different things for you. So you spread the risk a little bit, right?
Exactly. And so, many people watching might switch off and think, oh, it's too complicated. And that's the thing we found on the platform is people they buy into the concept of must invest, but tell me what to invest in.
Yes.
And I always say to people, trust yourself. So in this example of the ETFs, the first company that started ETFs in South Africa in 2000, Satrix. So they recently launched an ETF which is called Smart Cities. So what that ETF does, it tracks companies that are enabling smart cities. Wow. So it simply says there's more urbanization by 20, and you'll know this better than anybody, by 2030, so many people are going to be living in cities across the world. So which companies are enabling technologies to assist that trend? Another ETF might track environmental companies. So you might want to invest in companies that are green energy. So it gives you an opportunity to invest in a particular sector or a particular field. But apart from ETFs, they're traditional unit trusts that you can invest in. Many people like that because you just simply put an amount down and somebody else does the hard graft.
And that means you don't have to buy a share of a company. You just buy as much as you can afford.
Correct, absolutely. So, and that's true on Easy Equities. You don't have to look at the value of any share or any unit trust. You can say, I've got 500 Rand or 5,000 Rand or 5 Rand. It doesn't really matter. You can invest in property, you can invest in crypto, and within each of those asset classes that you've correctly identified, there are a whole bunch of options as well. And maybe an easy example would be just look at the companies that are listed on the Joburg Stock Exchange. So you're going to choose to invest in a company. Many people will just invest in the big ones that they know. So whether that's a Naspers, for example. There's an ETF, for example, that tracks the top 40. So you're investing in the top 40 shares. But what I find fascinating about investing is you start delving into the companies that are lower down, the smaller companies. There are phenomenal companies run by phenomenal people in this country that do amazing stuff. And for me, it's really investing and taking a bit of a punt with those companies because I think that, it's proven that South Africans are so innovative, Graham. And I'm hoping that's going to help me retire and buy more wine in the future.
Talking about wine and things, you obviously, the Easy Equities platform can only give you access to various asset classes that are publicly traded, but you could also invest in art, you can invest in wine itself. Carl and I could never invest in wine because we just drink it.
And we're so going to interrupt you, but we're not going to, we are already changing that. So through the development of some of our technology, we're enabling a platform. So, Charles, our CEO and founder of Easy Equities, will potentially kill me for saying this because this is again one of his great brainwaves. But in the not too distant future, you're going to be able to invest in non-listed assets on the platform.
Brilliant.
So if you've got an interesting company idea, you could bring it to Easy Equities to list. It could include wines and art and a whole bunch of other stuff.
I love the idea of the future of investing. This is the point of the conversation, right? Why couldn't we, in the future, the Louvre in Paris says we're going to sell the Mona Lisa,
absolutely.
but not to one person. We're going to cut it up, not literally, but we're going to allow 1 million people to invest in the Mona Lisa, and then I could buy a piece of the Mona Lisa for 1,000 rand.
And there are people that have started that, and whether you like it or not, with NFTs, which we don't have to get into now. So taking digital art and putting it in a couple of pieces. So there are lots of ways. And some traditional investment people will roll their eyes and say, you know, what nonsense they're talking, and or that won't work. One thing that I've learned from Easy Equities, and we've got, you know, over 1 million clients, there's no such thing as won't work or can't work. You've got to listen to the clients. So your very far-fetched, crazy idea that won't work about the Mona Lisa, you know, I put good money on it that we'll sit here in a couple of years and it's happening.
Within 5 years' time, Easy Equities will have the Mona Lisa ETF on it. So the one I've decided to share with you, and I do want to show this one. This is Erika Obermeyer, and this is a very interesting blend. So I thought with the conversation around various different options. So this is a Syrah Grenache Noir, which is interesting. So that's the red Grenache, and then a Cinsault, and I've never seen that blend before, and I suppose that's why I just wanted to bring it. This is the first time I've even opened this bottle, and it's just saying you can blend anything you like, and with investments you can do the same. It's your choice.
And maybe you must talk a little bit, because Erika is also interesting. I mean, what is her story?
Well, she was one of the first ever female winemakers. She was certainly the first South African female winemaker to win an international award, and that's kind of got her on the map. But she's deliberately trying to do things differently. And I don't think you could say that it needed a feminine touch to come into the winemaking industry. That's not quite how wine works. But she has brought a different perspective, and I think that perspective comes from a different worldview. It happens to be that her worldview is that of a woman seeing things differently. I don't think that needs to be the emphasis of it, but it's wonderful to see diversity in every sector.
And diversity is strength. I mean, she reminds me of Norma Ratcliffe from Warwick Wines, and also one of the first women involved in the wine industry. And you're right, brings a different perspective. It's one of the things that I'm really proud of at Easy Equities, is that we're approaching 50% in terms of male-female investors. Some months with our new clients we get sort of 1,000 odd new clients a day plus. Sometimes it's more than 50%. And when we started Easy Equities, it was very different from that. It was still majority male. Because of this old thing that women can't, women shouldn't, women mustn't.
And in a marriage relationship, the man looks after the money.
And one thing that changed, we saw early on a spike in when women got divorced, because now they had to look after, and how smart, obviously, these women investors are. So I love the fact that and it forces product providers to have products that are appropriate not just to one demographic. So it's interesting.
And for me, I suppose, if we're talking about marriages or families, the Easy Equities platform allows you share the login details, and everybody can log into the app. Just check it and have family conversations about it. So it isn't just restricted to whoever the so-called head of the household is to sort of manage the money. This can now be a broader conversation.
And it's one of the things I do very badly in my day job as heading up the marketing of these equities. I don't tell enough of the stories, and I don't, we've got millions of clients that tell the story, but one of my favorite things, and I've referenced him a few times, but he was is the founder of Easy Equities. Charles had conversations with his kids and his wife, and that's what spurred the idea for Easy Equities, because why aren't you investing? And they gave him the tips, but it wasn't fun, it wasn't interesting, it wasn't this. And so he modeled a lot of the platform on that. And then to talk to your kids, and somebody says, well, for my birthday I want 1,000 rand or 100 rand. Well, to buy this or that. If you invest that money in the company that makes that product, in a few years' time you're probably able to buy 3 of those yourself. So we've got great stories about kids that don't take a physical thing for their birthday, that takes cash as gifts, invests, and they are super smart, and Graham's super wealthy, and are going to be buying wines that you and I can't afford.
And what a great thought that you can make investing now available to people, and then allow different perspectives to come in and look at different ways of investing. And that 5-10 years from now, you and I might both be very surprised as to what's available to the average investor.
Yeah, I mean, you've spoken a little bit about, the books that you've written and what have you, and who would have predicted when you started writing those books a lot of stuff that we're experiencing now? And for me, the short answer is, you did. It's not a prediction. Yeah. But in looking to the future, because you don't crystal gaze and predict, you're not a fortune teller. But it is interesting to not be constrained by this, worldview that investment is this, it's an interesting thing that Easy Equity is learning from our investors and what they want and what they need. And I look forward to sitting here with you. We've known each other for probably 20 odd years. In another 20 years,
sure,
and seeing how the world has changed and how the world has improved.
Yeah. Well, Erika, if you ever watch this, thank you. This is a really nice blend. I like this. I'm going to get a few more bottles. Different, interesting, unusual. And I think that's what we're saying, is that from an investment perspective, the more people we get involved in investing, the more different, interesting investments we might find. And that's going to be good for all of us.
Absolutely.
Cheers.
Cheers.